This week, Ernie Bio from Forgepoint Capital is with us to discuss the state of the security market. Then Sandy Carielli from Forrester joins us to talk about lessons learned from 2022's biggest breaches. Finally, in the enterprise security news, lots of funding announcements and new companies. Private equity acquires Multigo. Cinven acquires RSA Archer. Comcast launches a security product. Zscaler has beef with Gartner. CISA releases updated zero trust model. Tyler's going to love that. Amazon jumps into the AI LLM fray. AutoGPT stretches the imagination and potential use cases for AI. The ever-changing API security market. New security books just released. Zombie birds. All that and more on this episode of Enterprise Security Weekly.
This is a Security Weekly production for security professionals by security professionals. Please visit securityweekly.com/subscribe to subscribe to all the shows on our network. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we talk security vendors and aren't afraid to name names. It's Enterprise Security Weekly.
When organizations face poor web performance, challenges building modern applications at scale, or need to reduce operational and development costs, they turn to Fastly. Fastly's distributed edge network means your business can unleash its growth potential without worrying about scaling your infrastructure, whether for growth of users, transaction volume, or geographic expansion. Get the speed, security, and edge cloud innovation you need to deliver profitable and engaging experiences. Visit securityweekly.com/Fastly for more information or to speak to an expert. Welcome to Enterprise Security Weekly and happy National Lima Bean Respect Day. This is episode 314, recorded on Thursday, April 20th, 2023. I'm your host, Adrian Sanabria, and joining me is the czar of Zero Trust, the captain of content, Katie Tytler. How you doing, Katie?
I'm fine. I was unaware that lima beans felt disrespected, but you learn something new every single day.
Well, maybe it's because they put it on April 20th, and so they have to compete with a different agricultural product on this day. So it's hard to get respect, maybe.
Okay, we'll go with that today.
As a member of the Security Weekly community, we are pleased to offer you 20% off your InfoSec World 2023 tickets. Join a community of over 2,000 security professionals and innovators at InfoSec World on September 25th through 27th at Disney's Coronado Springs Resort. Experience world-class learning and networking through enlightening keynotes, informative panel discussions, interactive breakout sessions, hands-on workshops, and more. Register today at securityweekly.com/InfoSec World 2023 using code ISW23-SecWeek20. All right. And today, for our first interview, we're having a long overdue state of the market chat with a VC. And we have a new VC for you. Today, we're excited to have Ernie Bio, Managing Director at Forgepoint Capital, with us today. Ernie has been in venture capital for 4.5 years and is focused on early stage investing. And before entering the world investment, Ernie worked with U.S. Cyber Command and the Pentagon, and he can also fly an F-16. Welcome, Ernie.
Hey, thanks for having me. Appreciate you having me on here.
Yeah, no, we get really excited about this because we do cover the market a lot. You know, we in the news segment every week, we talk about the latest fundings, acquisitions, deal rationale, emerging tech, emerging security markets, and new startups coming out of stealth. It's almost all the hosts on this program have been industry analysts in our past, so it's something that I guess just kind of sticks with you. And for us, it's just kind of following what the market is doing versus what's happening with cybercrime and what buyers are needing, and just trying to stitch all that together for the listeners. So it's but before we jump into the market, I wanted to kind of dive into your background a little bit. We've seen some crazy backgrounds in cybersecurity. Just last week, I interviewed somebody who was an award-winning Flair bartender turned pen tester. So tell me, what's the path from the cockpit of an F-16 to investing in managed security platforms?
Yeah, I do have one of the more random backgrounds in security and in venture capital. And for me, I started my career as a pilot in the Air Force, and like a lot of veterans, went to business school, went to a startup, did a bunch of things. And as a reservist, um, I was asked to entertain a job with Cyber Command, where I would go back on active duty orders, go out to Silicon Valley and help them build relationships with both VCs, but also cybersecurity startups as part of an entity called the Defense Innovation Unit Experimental, which was being stood up by the Pentagon. So this is in 2015. And long story short, I got very interested with cybersecurity, and I went and worked for U.S. Cyber Command, and then later that transitioned into a job with the Pentagon. So with that experience, I got to work with a lot of startups in the security space, as well as network amongst VCs to include my current employer. So it was a kind of unplanned phase in my career, but probably one of the best things that happened to me.
And is that also around the same time that cyber became an official domain, according to the military, or was that earlier than I'm thinking? My sense of time is all off now.
Yeah, that probably was really consummated when they stood up Cyber Command in about 2008. So I think that's when Cyber Command became a sub-unified command. It's now a combatant command, but that's when things got really serious, and they tried to, every service has their own cybersecurity component, but U.S. Cyber Command was that overarching entity that was stood up in roughly 2008.
Okay, yeah. And you already answered some of my other questions. I was going to ask why investing, and I didn't realize that the role in the military, your cyber role in the military, was directly related to getting into that industry and getting into that community. And that's interesting. Like now that you have hindsight, how is getting involved from the federal government side different from doing it from the private side?
Well, I mean, so on the federal side, you think about Fort Meade, there is a lot of technical talent, probably some of the best in the world. What I did was something very unique at the time under Admiral Rogers, who was running both Cyber Command and the NSA, because a lot of times it's the military plus the defense industrial base, and the commercial sector the private sector is largely left out. That has changed over time. So there's a lot of partnerships that have been built, especially with the work CISA's doing and Jen Easterly. There's also work being done at each of the services, as well as all the way up to Cyber Command. So what you don't find in the government is go-to-market expertise. You find technical expertise, but you don't find that go-to-market expertise. So I think when you bring those together, you can really create some magic, whether it's starting a company or bringing talent into a company that's scaling up.
Okay. And so let's talk a little bit about Forgepoint. I think I mentioned in your bio that you do early stage investing, but Forgepoint as a VC, is it all early stage and it's all cybersecurity focused, right?
Yep, we are a sector-focused fund, 100% cybersecurity. We defined early stage as Series A and B. So that's our sweet spot. Now, do we occasionally do deals a little bit earlier? Yes. And do we occasionally do deals a little later? Yes. But the sweet spot where we bring the most value is Series A and B, because we like to lead those deals. We like to take board seats. We usually take a director and an observer seat. So we tackle deals as a team. And for for us, that's how we bring value. Because, in the market, when you look at VCs, especially in 2021 and in the last year, some VCs compete on valuation. So who's just going to pay the most? And others compete on value. And we tend to compete on value and helping our companies and being very hands-on.
Yeah, and so that kind of leads me to the question of, this is something I always wonder with VCs. I almost see it as like a funnel, like you might see a sales funnel or a marketing funnel in a business. There's so many vendors out there. We see dozens, even in the current market, we see dozens and dozens of companies coming out of stealth and raising money. And we do our best to talk about all the interesting ones in the news segment of the show every week, and still we don't have time to talk about all of them. How do you like maybe starting at the top, if we're going to call it a funnel, at the top of that funnel, how do you choose what to invest in? Like, I've noticed a lot of what you've invested in kind of sits on that line between a software company and a services company, a lot of managed platforms, managed services, things like that. Just kind of interested in what that process is like. You said it's a team effort. How do you start to draw that down, decide, what you want to put money into? Like, does that exist before you see the company? Like, do you know what you're looking for and you go to find it? Or do you look at everything out there and say, that looks interesting, let's take a look in that direction? Or maybe all the above, I don't know.
Yeah, so one of the reason we were founded as a sector-focused fund in 2015, when this market wasn't as obvious, was that cybersecurity is complicated. It's changing. There's a lot of companies being built. It started, I should say. And as you know, there's a lot of features that are masquerading as products. There's a lot of vendor overlap. So for us, we looked at that complexity and we say, hey, we need to focus. The second thing we said is we need a larger team that can look at every inch of the market. So right now we have 12 investors fully focused on cybersecurity. To get to the other part of your question, we're thesis-based. So what we do is we leverage our advisory board, as well as our personal networks, as well as CISO networks, to try to look around the corner and say, what are the new threats? What is the new technology? What new technology needs to be secured? So it's kind of our crystal ball, because we can't be rear view facing. We need to look forward, but we need to make sure we don't look forward too much. So you think of things like homomorphic encryption, quantum secure encryption. There's a lot of things that you don't know the timeline, and that's when we make mistakes. So for us, is what's in the next 1 to 3 years? What do we build a thesis on? What companies are there? The ones we know about, the ones that may be in stealth, the harder ones to find. And that's how we start building our funnel. And we use a CRM to help aggregate all that data and share the data amongst the team. And we're constantly on our, like every other VC, we have a Monday meeting, but in that meeting, we're validating or not validating different thesis areas. We're looking at deals in our pipeline. And as 12 investors, we're all weighing in on, hey, I already saw this company. Here's an issue there. Or, hey, we should really look at this company. They're in stealth, but they're doing some interesting things and they have repeat founders. So it's an iterative process. And it's one that we're constantly fine-tuning.
I assume as well, as you're going through this, companies, especially early stage companies, they can change in the span of a year and a half, kind of dramatically. So that iterative process is probably really important. But if you're talking about future things, I have 2 crystal ball questions for you, actually, about startups. What areas do you think are going to be relevant in that, 2 to 5 year span? And what, not necessarily named companies, but areas of security? And what areas do you think will either consolidate or collapse or just, not be as hot as maybe they were last year or are this year?
Yeah, those are great questions. And I don't have all the answers, but I'll give you my opinion. So I actually just got off a board meeting, and a quarter of that board meeting was talking about large language models and generative AI. And if you asked me a year ago about it, I would have been, I probably wouldn't have said much about this, because if you think back 3 years ago, there's a lot of AI and ML buzz within cybersecurity, but at the end of the day, it wasn't really moving the needle. I think it's real now, and it's something that when you think of SecOps, when you think of bringing context and the ability to ask the right questions, reducing false positives for those SOC analysts. I think AI, we're going to see it in AppSec, we're going to see it within the CI/CD, and being able to remove vulnerabilities out of code, all the way at the left, at the developer's fingertips. So to me, it's something that cannot be ignored right now. As far as consolidation goes, we've been talking about consolidation for the last 5 years across different areas. I think where you're going to start seeing it more is in cloud security. And the reason I say that is over the last 5 years, we've seen cloud security posture management, workload protection, entitlement management, and all these different siloed things within the cloud. With, at the end of the day, whether it's a multi or a hybrid cloud, all of those are connected. So I think you're going to start seeing more of unified platforms and a best of suite approach to the cloud. You're still going to have those point solutions, those best of breed that every CISO is going to want to plug into certain platforms. But I think you're going to start seeing more consolidation there.
And does that give some of these point companies, especially startups, you have to start small, you can't start huge. Does that put them at a disadvantage if there are these big suite companies, the Microsofts and the Palos and the Ciscos, that are able to gobble up companies and grow by acquisition as well as building their own? So does that put startups in a rough place?
So, great question. No. So when we look at our portfolio construction, we have point solutions, and there's a very good reason we do that, and we have platforms. And the reason we like point solutions, and I'll give you but the market answer and then the VC answer, is with point solution, you look at a Palo Alto Networks, and you look at all the acquisitions they've done, they've all been, if not all of them, 90% have been point solutions. Because most organizations, even the best strategic cybersecurity companies, spend at least 70% of their R&D budget on maintaining or upgrading their current offerings. So they leave 30% for new innovation. And in order for them to catch up, they need to buy these point solutions. And that's been a part of Palo's strategy. You've seen it a little with CrowdStrike as well as SentinelOne. So you're going to see that. From a VC standpoint, point solutions are going to be companies that don't require as much capital to go in. They'll exit sooner than a platform. Platforms take a long time to come to fruition, and we'll have, from an investor standpoint, higher IRR. So for those reasons, we really like point solutions, but we like platforms as well. So you need to have both, because most of the platforms are going to take, you look at the companies that have gone public, it takes 8 to 10 years and several $100 million. If not, I think all the companies you see in the queue to go public now, whenever the market opens up, most have raised $500 million to $1 billion. So it takes a very long time. So those are some of the reasons why we love both point solutions and platforms.
So from a startup point of view, some people might be listening to this thinking, oh, I have this great idea, I'm going to go to market with the goal of being acquired. Isn't there a little bit of a risk to starting a company with that goal in mind?
Well, I mean, put it this way: when we invest, we say we invest with the exit in mind. So when we invest in a company, we in our investment memo in our deck, we kind of try to predict the future on who would possibly acquire this company, why, or if we think they could potentially become an IPO candidate. So as a founder, you always want to be thinking about an exit. What you don't want to do is try to rush that, so you get in a situation where you're bought, not sold. So for us, it's we're looking at the statistics over time, and if you look, roughly 50% of all the cybersecurity control transactions, M&A that's happened over the last 5 years, 50% has been 100 million or under. Guess what? Almost all of those are point solutions. About 20% have been about 100 to 300 million. So now we're looking at 60 to 65% of all transactions over the last 5 years have been 300 million or under. If you're a platform, you are going to be acquired for well north of that, and especially if you end up IPOing. So for founders, they should always think about the exit, but that should not be what wakes them up every day. What wakes them up every day is, how do I bring value to the CISO and their team as fast as possible? How do I build the best product that integrates extremely easily into their current stack? If you're talking some of the point solutions.
And even now, when we're in a little bit of a down market, it's not the best market. VC money isn't flowing in the same way that it was a year or even 2 years ago. How is that impacting startups? We've talked on the show a little bit about being smarter with your money if you're a startup, reducing the burn rate. But are there other things that are a little less obvious that startups should be thinking about, or not even startups, but entrepreneurs who are dreaming up these ideas for new companies? What would you say to them if they wanted to be starting up a company right now in this particular market with the financial situation being what it is?
Yeah, it's really been the tale of two cities. When you look at the back half of 2020, all of 2021, and a little into last year, it was VCs wanted growth at all costs. And what did that lead to? It led to burning through your cash faster. It led to hiring well above what you probably should have. And fortunately, that's changed. And now, it's all about incentives. And for our firm, it never changed. We like companies that are that are growing at a sustainable rate. And when you look at things like burn ratio and other metrics, we want companies that are being built for the long haul. So now the incentives from VCs is, it's not growth at all costs. It's metered growth. We're not expecting doubling every year, although that's welcomed. What our expectations are a little more, brought down to reality. So as a founder, you wanna look at your runway and as a function of your burn rate, and ensure that you have enough capital to get in the strike zone of the next round. So if you're a seed stage company and you have aspirations of doing a Series A, which you all do, you want to think about and kind of work backwards. What do I want to be when I'm a Series A company? I'll tell you what I look for. It's different amongst different VCs since we come in at the Series A, but I'm looking at roughly 1 to 2+ million of real ARR, right? I'm looking at some of the SaaS metrics. We look at gross dollar retention, net retention. Some of those, it's a little early, so you have to take them with a grain of salt. I'm looking at how the team's been hired, what players have been brought in for the executive team and the extended leadership team. And one of the most important signals is looking at the customers. So we like to see, to throw a number out there, 6 to 10 key accounts that have the technology deployed at scale in an operational environment, not like an innovation, side project over here or very small. We want to be able to talk to the CISO, talk to the cloud security architect, whomever, and really understand what problem is being solved in their mind and why they're actually allocating budget for that. So that's how I would answer that.
And in a sort of sidecar topic to this, at the same time as we're looking at a different VC environment, a different type of funding model for a lot of companies, we're also seeing in the US the government coming out with new regulations, new guidelines, things from the OECD, things from CISA, that are putting a even greater focus on cybersecurity. And in some cases, it's things like information sharing. Great. In some cases, we're talking about software makers potentially becoming more liable if they're the cause of a major attack. How should startups or early stage companies be thinking about some of this guidance and some of the regulations? How will that or will it affect how companies grow and expand in the future?
Yeah, you're referring a lot there to Pillar 3 in the National Cybersecurity Strategy, which implies putting liability on the software producers. To me, if you're a startup, or if you're a later stage, or even a public company, I think you have a responsibility to do kind of best, just kind of how the internet's brought to you, best effort. It's best effort looking at your supply chain, using the right tools. It's really people, process, and technology to ensure that you are shipping the most secure code. CISA and the FBI and a few other organizations, I think they even have Five Eye organizations in there, just put out security by design principles that go into that. There are a lot of companies that are looking at source code now, looking at open source, looking at binaries. You have, on the other side, you have app security testing, whether it's SaaS, SaaS, or even using IaaS now. Some companies are using SDKs to put in IaaS. So all of that, to me, leads to a best effort. Are you going to be 100% secure at the end of the day with motivated attackers on the other side of the spectrum? No. So the way I read that part of the strategy is, I think there's going to be a best effort that is required by whether you're early stage or you're late stage or you're public company. That's one. The other piece to that too is, look who stands to benefit the most from secure products. It's Fortune 500 and these larger companies that have a extremely large footprint and that are large attack surfaces for the nation state as well as criminal organizations.
Does that change potentially how a startup hires? Because when you're a young company, you only have a certain amount of budget, obviously, and you have to hire pretty strategically. So as some of these things become important as a builder of cybersecurity products, does that change, hey, either I hire a developer or I hire an HR person? So does that change the equation at all?
I think it changes it slightly, but as a startup, your job is to build a product, get product market fit, get repeatability of your go-to-market, and then scalability of that go-to-market. So I think, and security organizations are a little bit different than because most of them are technical. A lot of them are former practitioners. So I think inherently a lot of cybersecurity startups have a maniacal focus on the security of their products, but you still need to hire your go-to-market team. You still need to hire eventually someone to lead HR. So none of that should be diminished. I think it's more of a focus and just being cognizant of it, because at the end of the day, when you think of just think of some of the largest banks in the country. Why are they going to buy from a seed stage or a Series A startup? They're buying from them, because they have a problem that they can't solve with the existing products out there. That's one reason. And part of that is building trust. And that's one of the things with cybersecurity is the sales cycles sometimes are long because there's a trust building component that takes time. There's usually some type of proof of concept, whether it's paid or unpaid. So during that process, trust is being built. And for a lot of these startups, they're going to know if there's an issue with the software at that point, and I think it'll become a self-fulfilling prophecy for companies that are cutting corners.
Yeah, and that's something really interesting that I've dived into quite a bit, working on the vendor side myself, and also being on the buyer side and the industry analyst side. I've seen this from a lot of different perspectives, and it does seem like there's a lot of pressure there to I don't want to say fake it till you make it, but certainly there's a dose of that in any startup in any industry. And, the marketing folks you hire are kind of trained on that. Right. And there is kind of this pressure to speak to some of the current buzzwords of the age and things like that. But then you always risk, that trust that you're talking about building, where you don't want to oversell what the product is capable of and what you can do. And, combining that, because that's a very kind of traditional, maybe software approach, and looking at some of your investments, this is a very interesting trend to me, that this, like the Bishop Foxes out there, the Arctic Wolves, these companies that kind of have found this combination of services and software that allows them to grow and be valued, kind of like a pure software player. So I'm kind of interested in your thoughts on that addition to the, like 10 years ago, I don't think we ever saw anybody investing in services firms. And I guess services firms didn't really exist in the way they do now with some of the MDR firms and platforms that are out there.
Yeah, that's a unique thing about our firm. I mentioned point solutions platforms. The other one are companies like you mentioned, Bishop Fox, that started out as a consultancy, pure services, and over time have become a tech-enabled service. And we've done this with several companies across both of our funds now, where we have become, a tech-enabled service where there's actual material ARR that complements the services, and they become synergistic to a certain point. So in the case of pen testing, there's the future is automated pen testing, automated everything really, but in this case, automated pen testing. They have their Cosmos platform, but there's also always a need for humans in the loop for some, whether you're talking about entitlements for a lot of big banks, you're talking about pen testing in this case. So for us, we would never invest in a pure services company, but a company that transitions when we invest or right before we invest into a tech-enabled service. That is something we've done in the past successfully and will continue to do. And from an investment standpoint, you have what we call margin and multiple expansion. A services company may have, a good one, 50% gross margin on that services, whereas a product company is going to have 75, 80%. So as you bring in that managed service piece, you bring both the margins up, and then for exit and valuation purposes, you bring those multiples up.
Yeah, I think it's really interesting. And I've not heard that term before, the tech-enabled services. And, you mentioned talking, you had a board meeting where a good chunk of it was spent talking about AI LLMs, and we've been very focused on that as well. And we're actually talking about, in the new segment, AutoGPT today. And I wonder, even if you asked me just 2 years ago, just like you were saying, if automated pen testing was on the horizon, I'd say absolutely not. And then after seeing what you could do with something like AutoGPT, where it's basically, kind of self-prompts itself until it completes its goal, and that goal could be, any closed loop, point in time process like a pen test, or it could even be continuous, like Bishop Fox does with Cosmos. Are we suddenly a lot closer than we thought we were a year ago, do you think?
I do. Yeah, I think kind of everything changed back in November. Well, I'm sure people that were following AI closely, following everything OpenAI did, Google DeepMind weren't surprised, but to be quite honest, people like myself, I was surprised with the capability. And in my mind, it always came down to human machine teaming. You're going to have skilled humans in the loop that are augmented. What you could call it an Iron Man for Iron Man suit for security practitioners. Call it whatever you will, but being able to, again, if you're, and I know Microsoft just came out with their Copilot. How do you bring context and the ability to ask questions and reduce false positives and all of that stuff? How do you help a tier 3 analyst be able to do that faster with more efficiency? So I think that's the future. I don't want to get too excited because I think there's some downsides to using foundation models and LLMs. There's compute costs. There's limits on GPUs. There's a garbage in, garbage out type of scenario that can happen. But I think overall, we've hit an inflection point, and I'm very excited to see how this affects the roadmaps of our current portfolio companies and how this affects future investments that we do.
Yeah, same here. I mean, not I don't have investments, but yeah, as an observer of the trends happening, it's I use it multiple times a day, every day. It's something that I've been urging other people to do because it's easy to make assumptions like, oh, surely it can do this, but not that, right? And you've got to try it because I'm constantly surprised at both what it can do and what it kind of falls on its face on, which honestly, ChatGPT doesn't fall on its face much, but it's much more limited. And Google Bard is supposedly connected to the internet and can do a lot more, but 9 times out of 10, I find it's falling on its face on a lot of stuff, a lot of hallucination that was kind of erased with GPT-4. But it's really becoming clear to me that there are certain use cases, and there are ones that security can really get behind. Like most of the tasks you're going to do running a pen test, that work. Like somebody just hooked up Burp Suite, basically put together a project that connects Burp Suite with GPT, and but other things, like if you're asking it to inform you of things, to tell you things, it'll make up facts, it'll get years wrong, stuff like that, but. Simple tasks, that humans don't really like to do anyway, repetitive tasks, seems like it's a huge win.
Yeah, and let's not forget the attackers have access to it too. So, you look at, the just how much ransomware as a service has increased. You look at how phishing has gotten better. You look at, in I think Mandiant said in 2021, there were 50 0 days used. And in 2020, 50. In 2021, I think there were 81. So it's a benefit to us, but it's also helping the folks on the other side of the wall there that are trying to make our life miserable. Yeah,
that's a scary bit for sure. I've got a blog post I'm putting together on that I don't want to talk. I'm kind of nervous even talking about it because you already kind of hinted at it there, ransomware as a service, and we were just talking about auto GPT, that could be a devastating combination.
Yep.
So let's, I want to shift back to earlier in the conversation. We were talking about, you were kind of talking about how you go through that funnel, how you, just kind of your day-to-day, you're talking to CISOs, you have an advisory board, you're probably having lots of conversations with founders, with the investments you've already done that you're advising. What shows up in your calendar that gets you most excited? Like, because I imagine most of your days are just mostly having conversations with people. But what part like really gets you, like you look at your calendar in the morning and you're looking forward to it?
So there's two answers there. One, I love meeting with new companies, whether it's first-time founders or repeat founders, but I love meeting companies where you have super passionate founders, that want to solve a problem, and it becomes their life kind of revolves around that. And I've never been a founder, but I have ultimate respect for founders because you're really dedicating 100% of your bandwidth in life to solving a problem when all the odds are against you. You think of how fragile startups are, how many things that can go wrong, market macroeconomic conditions, competition, you name it, right? So I love meeting with these founders that just wake up every day ready to solve problems and kind of, take on the world. It's kind of a David and Goliath because a lot of times they're going against larger companies, or if they're in white space, they're doing something that's never been done before, and they're kind of feeling their way through the dark. So to me, that's exciting. On the other side, like other VCs, I guess we look at our investments and the companies. We work closely with the companies we're on the board as kind of our children. So as they go from, we lead a Series A and they do a Series B, they do a Series C, or there's an exit. Those things get us very excited. Some of that stuff is happening right now in our portfolio. So those two things keep me going at the end of the day.
Awesome. And then, as we wrap up here, talking about we haven't talked too much about the state of the market, like the more macro economic view, but eventually it'll, it's going to come back. And I assume there's going to be some kind of latency between, where we see it come back in terms of investments and exits. You got to wait for interest rates to change and some of the bigger stuff to happen before we can see that other stuff move. But do we go back to growth at any cost at any point, or are there any lasting effects of this that are going to lead to permanent changes? Do you think in terms of like we were seeing raises that were 4 months apart, 5 months apart, instead of the typical 18 that we were used to. Like Series B would come through just after we got finished talking about Series A. But what do you think it looks like after the recovery?
I think in the near term, so in the next, call it 1 to 3 years, we do not go back to growth at all costs. We look at what I mentioned earlier, where investors actually appreciate growth that's done in a very predictable and an efficient manner, while still granted, we want to grow the companies as much as possible, but we can't be doing around, to your point, every 4, 5, 6 months. That's just not sustainable. If you look at Q1 in 2022, there was roughly $8 billion worth of cyber deals done. This last quarter, which ended a few weeks ago, we did just shy of $3 billion. So VCs in general have kind of pulled back a little, but it really depends on where you look. In seed stage, where you're really betting on teams, the money keeps flowing in, and there's been quite a healthy amount. Even if you look at last year, it was only in seed stage where the number of deals went up. In Series A being growth, they all went down. So seed is a little different. Series A and B, what we're seeing there were a lot of companies that raised at valuations, which, to be blunt, they didn't deserve 12, 18 months ago. A lot of them are running out of runway and are unable to do a typical up round. So they're reopening their old round. They're doing some type of safe or convertible note to bridge them, or when things go worse, they're doing a down round, which gets into a whole nother conversation. On the growth side, I think you're seeing a flight to quality, and the growth investors are looking for quality deals. Some have been done, some have been announced, some will be announced here after RSA. But what they're doing is they're using public market multiples as really a proxy for valuing these growth stage companies. Because if you look at the end of last week, the company with the highest valuation, as far from a multiple standpoint, was Zscaler. Second was CrowdStrike, and they were both around 11, 10x forward revenue, 2023 or next 12-month revenue. So I think you got to look at it as seed, early stage, and growth, because different things are going on in each of those components of the startup landscape.
All right, awesome stuff. Ernie, you going to be at RSA or any of the Forge? I assume some of you are going to be out there.
Yeah, our entire team will be there, and we have 6 events going on. With the highlight, this will be the 13th year we do our flagship dinner Wednesday night. That's an invite only, and it's an extremely it's a great event to show our community, our network. So I am looking forward to it, but I'm going to get some sleep this weekend, take my vitamins, because it's going to be a busy week.
It is. Ernie, thank you so much for joining us. Hopefully we can have you back again. We like to make this kind of a reoccurring
I'd welcome
thing
it.
where we have this conversation as we see the different market signs and trends emerge. Yeah, thanks so much.
Hey, I appreciate you guys having me on, and all the best to you guys, and hopefully run into you guys at RSA.
Awesome. All right, stay tuned. When we come back, we're going to talk about lessons learned from 2022 breaches with Sandy Carielli from Forrester.
Created in 2005 and hosted by security industry veterans, Paul Security Weekly is your source for in-depth coverage of the latest vulnerabilities, exploits, and security research. Our weekly security news discussion dives deep into the security issues we face today and potential solutions in a fun and lively atmosphere. Each week, we bring on guests from the security community to learn about their journey and discuss topics relevant to their work and research. You can also subscribe to our show by visiting securityweekly.com/subscribe or look for Paul Security Weekly in your favorite podcast catcher. We've recorded a ton of content over the years, so we created Spotify playlists featuring some of our favorite episodes, including interviews with Marcus Random, John McAfee, and Chris Roberts, to name a few. You can find them at securityweekly.com/starter packs.
Attackers are only getting more proficient, so how can you proactively adapt your cybersecurity strategy? Core Security by Fortra helps you uncover and prioritize the risks that pose the biggest threat to your organization. Core Impact is a penetration testing tool that safely finds and exploits vulnerabilities using the same techniques as attackers. You can conduct advanced pen tests with ease using certified exploits and automations. Take your engagements even further by pairing with our additional red teaming tools from Cobalt Strike and Outflank. Learn more at securityweekly.com/Fortra Core Security. Welcome back to Enterprise Security Weekly. Do you have a specific guest or topic that you want us to cover in one of the shows? Submit your suggestions for guests by visiting securityweekly.com/guests and completing the form. We review suggestions monthly, and we'll reach out to you once reviewed. I'm a little behind right now. I need to review those. I think that I probably have a couple dozen in there. Something about RSA coming up, and I've gotten so many emails. Sandy's not feeling bad for me. Sandy's got the same amount, or probably many, many more emails than I do.
I've scheduled my time to sleep, Adrian.
Let's not talk about RSA yet. We've got a couple days. All right.
Yes.
Let's savor them. All right. That is Sandy Carielli, who joins us today to talk about lessons learned from 2022's biggest data breaches and privacy violations, a recent report released from Forrester, where Sandy is a principal analyst. She covers application security with an emphasis on collaboration between security, developer, and business teams. Welcome to the show, Sandy.
Hi, Adrian. Thanks very much for having me. Great to be here. Hi, everyone.
Yeah, no, always great to talk to analysts. I'm an ex-analyst. Katie's an ex-analyst. Tyler, who just comes on for the news segments now, is an ex-analyst. So It's somewhat of a theme for this show.
Yep. Now, Tyler and I go back quite a ways. So.
Yeah, me too. Same here. So this is, I love big picture stories. I love kind of diving into I love getting into the weeds as well, but every now and then zooming out and saying, are we really focused on the right things? And data really helps us do that, I feel like. And you have some really interesting data in this report here. One of the things that really leaped out at me that I don't think about a lot are the fines. I think about it's definitely part of the direct cost, but the media is so focused on ransomware. Are they going to pay the ransomware? Are they not going to pay the ransomware? And then we hear about the class action lawsuits, and there's all these places you have losses. And we know there's fines out there, but I hadn't actually seen the amounts for some of these fines, but it seems like there are some regulations with teeth these days.
Yes. And I suspect that part of the reason maybe that we don't think as much about the fines is that we get very caught up in the breach, and the breach is happening in the moment, and we're dealing with that. The fines come later. So by the time the fines come, we've often moved on to, unfortunately, dealing with other breaches, other incidents, other issues. But the fines have been pretty significant. And when you think about what has teeth, if you look at the top 35 fines from last year, the total amount fined was about $2.7 billion in US dollars. And about half of those fines were based in Europe, and a lot of them were tied to GDPR. So we are seeing that GDPR in particular has a lot of teeth.
Yeah. I mean, fines into the billions here, right?
The total in fines was $2.7 billion for the total. And the largest fine out there, from in APAC actually, was a total of $1.2 billion. The next largest one was $418 million. So there's some very large fines at the top. That second largest one of $418 million, that was Meta. And I will say that Meta and Twitter and some of the big social media companies, they were repeat offenders on the top 35 list. So we did see repeated violations from some of the companies that you would kind of expect.
Yeah, it's super interesting that that you've got both breaches and privacy abuses mixed in here, because at the end of the day, that they're both hits to the bottom line of a company. Whether they got hacked or they got fined, at the end of the day, it comes down to dollars, right? So I think it seems natural now that I've seen you do it, to put both of those in the same report. And I'm not sure I've seen those in the same report before. Most reports will cover privacy abuses or they'll cover breaches, but usually not both in the same place. But I think it makes a lot of sense.
One of the interesting things we added in this year also, Adrian, is we didn't just cover, very often when we talk about breaches, we talk about it in terms of the number of accounts stolen, right? So the top 35 breaches had 1.2 billion stolen accounts associated with them. The other thing we included this year, and we did this for the first time, is we looked at the top cryptocurrency breaches. Obviously, in those cases, they're not really dealing with stolen credentials. What they are dealing with is stolen funds. And the cash equivalent of just the top 9 crypto breaches last year was equivalent of $2.6 billion. And that's just the top 9, which is just an amazing number.
And sorry, that's cryptocurrency theft?
Yes.
Wow.
Yeah. So
amazing.
There are just a couple of large ones in there. Think about some of the things that made the news in the last year. We've got FTX, obviously. That's kind of the elephant in the room we have to talk about. But Binance, Ronin Blockchain, Nomad, a lot of these had hundreds of millions or more worth of cryptocurrency stolen as a result, not of compromising the blockchain, but of compromising some aspect in the connective tissue, compromising some part of the centralized pieces that then allowed an attacker to get access to the funds.
Right. I mean, it's the same thing we see with cryptography. Nobody's breaking the encryption algorithms typically. Right. It's because the developers put the private key in the same directory as the directory they landed in when they hacked the system, right? It's just bad design, really bad implementation.
Do you remember, and it's a good point, because if you go back 25 years ago and you used to ask organizations, how are you protecting your application? How are you protecting your organization? And for the very new, naive folks, the some answer would be, well, we use encryption. And clearly, as we know, that's not enough. And now what we're seeing with some of the newer cryptocurrency firms is they might be talking about decentralization, but all the other pieces have to come into play too. You've got to protect the centralized parts. You have to protect the connective tissue. You have to do the right level of governance. And if not, you end up with these hundreds of millions of dollars worth of assets that are being drained.
Yeah. So it seems interesting. We've seen this trend that the bad guys the cyber criminals used to be after data, right? And you pointed this out already, they're after funds now. But interesting, the regulations weren't quite there yet. Now the regulators are after data, and the criminals are after the money, just trying to get it direct, whether it's BEC or ransomware, just trying to get money directly transferred to them and skip the whole step of having to fence credit cards and sell identities and stuff like that. But how do you see that continuing? Is that, or are there any interesting trends there suggesting that's going to continue changing?
Let's talk about ransomware for a minute, because that's actually a really good example of how the landscape has shifted. When ransomware first became a thing, you'd get an email that, okay, all your data has been encrypted and we'll send you the decryption key when you send us a couple of Bitcoin or something like that. By the way, I remember the first time I heard about ransomware, it was back when I was working for RSA, and a call came into our inside sales team with someone whose data had been encrypted with the RSA algorithm, and not knowing any better, they called RSA and said, "Can you help me?" So confusion between the algorithm and the company, and then the assumption that the company could somehow find a way to decrypt this for them. And that speaks to sort of the lack of knowledge and the uphill climb that a lot of the people facing those attacks had early on. But if you look at how ransomware has evolved, the entire, okay, we're going to decrypt your data if you give us money, has turned out to be much less interesting to attackers than we will expose your data unless you give us money. Because it turns out that's a much more useful threat. We're going to expose your customers. We're going to put you at risk. And so they're asking organizations to pay not to have the data exposed. And if, as Trend is seeing, organizations don't pay up, then they're going to get the money from selling that information on forums anyway. So either way, they kind of win financially.
Right. So I just put out an essay, actually published it via Tyler's Substack, and just be interesting to get your take on it. But it's my take on ransomware that the ransomware itself, the mechanism of how they get paid is much less important than the mechanism of, than the cryptocurrency, the method of getting paid, the extortion piece. It seems like the most replaceable piece of that is, encrypting files isn't going to work anymore. We'll just take the data and threaten to release it. That doesn't work. Maybe they start bricking systems. Like, it seems like that part is modular, and maybe it's wrong to try and solve the lever, the thing that makes you pay the ransom, because that can be swapped out. I mean, just curious what your thoughts are on that theory.
One of the things that's become, I think it's been a source of awareness for a lot of organizations, is that the organizations that are conducting these ransomware attacks are often either state-sponsored or they're associated with governments and regions in the world that we don't necessarily want to be supporting. We saw a lot of ransomware gangs that have, for example, associated with Russia. And there's a realization now that there's going to be a lot more scrutiny if you pay up, regardless of what the attack was, regardless of whether the threat was, we're going to encrypt your data forever, we're going to expose your data, we're going to brick your machine, whatever the threat is. The incentive to pay up isn't always there, because the scrutiny that one might get after the fact of sending money to a criminal organization that has ties to a part of the world that we also have difficult interactions with, let's say, creates another level of geopolitical risk in this entire thing. And so, yes, ransomware attackers will try different approaches in order to get the money, but companies are being much more careful about not being willing to pay up. We're seeing fewer payouts.
Yeah, that's what I heard from the FBI's IC3 report for 2022. They said 40% decrease in payments. It was like 2021. I think we saw almost $1 billion paid out, and now it's under $500 million. Was last year. I thought that was really interesting.
There were some major attacks last year where the victim refused to pay out. I mean, the country of Costa Rica kind of ground to a halt because of ransomware attack, and they took a look at it and said, no, we'll figure it out. We'll deal with it. We don't want to pay up.
So if this trend continues, so another thing that I've observed about cybercrime is it doesn't really stop if you block what they're doing. If you stop what they're doing, they're going to shift to the next thing, right? They're they're not all going to hang up their black hats and just go legit. There's a reason that they're, that they're doing this. Other opportunities of making money just aren't there. So that's North Korea's primary source of GDP, I understand, is stealing cryptocurrency. Yeah, and it's going to continue. So if we make it hard for them to get paid from ransoms, at least in cryptocurrency, because know your customer and all that, in most of these countries, like legally, you can't pay these guys anyway if you're able to identify who they are. Like what happens? What happens if they, like, where are we pushing? This is something I'm always worried about, and I don't know the answer to it, but where are we pushing attackers to next? Like what's should we be watching out for?
With ransomware in particular, Adrian, they will still take that route. And if the company doesn't pay up, they're just going to sell those accounts off to a forum. Sell it off to someone on the dark web that's going to take those accounts and then try to use them to mount a credential stuffing attack against someone else, or use a stolen account to initiate and infiltrate another attack. We did see a number of attacks last year, again, in that top 35 breaches, where part of the attack was based on a previously stolen credential. And the attacker purchased that credential and used it to gain information and gain privileged access. So once the ransomware operators have the accounts, there are still a number of steps they can take to make more money. That's
a huge insight, because, yeah, you're right. Like, if you steal data and they don't pay the ransom, you still have their data, and that data is going to contain all kinds of stuff you can use to get into other companies. People are still putting passwords in plain text files, PDFs in there that could be useful, paths into other companies. No, that's a good point. That's a really good point.
The other thing I'll say to that is people still reuse passwords. So it's not just paths into that company, but it is attempting to take, let's say there were 100,000 credentials stolen. Try running them against a completely different website and see how many hit. Given the number of people that still reuse their passwords, you may get a 1 or 2% hit. And that could be a lot of gift card balances saved. It could be credit card information saved. You're going to make some money that way too.
Yeah. Katie, do you have any questions about the report?
Yeah, I unfortunately didn't get to see it too much ahead of time, but I think it's a great roundup. And one of the first things you mentioned is this whole idea of GDPR really starting to impact companies. And that we're looking at 5 years ago at this point. We still don't have a national privacy law here in the US. So based on what you've seen, based on this data, what are your thoughts about how all of this information, and if we were to get one of these bills passed as a law, as privacy regulation, how would that affect companies in the US? Do you think that they're set up better because a lot of them do business in Europe already? Or do you think we'd still be behind the 8 ball and companies would be willing to risk these fines? Because, as you mentioned also a little bit ago, some of these companies, they're the big tech companies, they're repeat offenders. They're weighing the costs of overhauling what they do with a fine and deciding the fine is better for them. So I know that was a lot of information packed into one very long rambling question, but what do you think the impact is, and how do you see things playing out in the US as far as potential privacy regulations and its impact on breach?
Funny you should ask that, Katie. Last year we had our first fine as a result of CCPA, the California Privacy Act. And that was to Sephora. And Sephora had to pay $1.2 million for their violation. Some of the other violations that we saw that were in North America came from actions filed by states' attorneys general. And so we are seeing some local fining that's happening. I think that if there was a national privacy law, we would still see a lot of fines. We would still see a lot of organizations struggling to get their acts together. I don't think that we're seeing fewer fines in the US because organizations know what to do, because a lot of the organizations that are getting fined in Europe, frankly, are US headquartered or global organizations that have business in the US. I think if we had a national law, we would see similar levels of fines here as we do in Europe. And you're right. The fining that we're seeing, particularly these repeat offenders, the fact that they're willing to be repeat offenders indicates that, the amount that they're being fined isn't necessarily punitive to them. Meta faced multiple fines in the top 35. Twitter was fined once or twice. A couple of those big social media and tech firms received a lot of the top fines, and they're continuing to go about their business. And ultimately, that's just because their revenues are so high that it isn't necessarily enough of a punishment. But we do see customer perception towards those firms change, and the amount of trust that customers have in those firms evolve. So maybe the other role that the breaches and the fines have with tech firms like that is that over time, customer trust fades, customer demand for better privacy grows, and customer willingness to provide data decreases until they see changes and reforms in some of those organizations. Now, maybe that's optimistic of me, but we are seeing data that shows that customer trust of a lot of those firms is not at an all-time high, let's say.
Do you think that in the U.S. in particular, because we don't have a national privacy law, CCPA for the moment is the strongest thing that we have out there.
Yep.
Do you think that there's a little bit of I'm stuck between a rock and a hard place? Either I'm on social media or I'm not. And so I have to, look at my personal data. Either I have the convenience of shopping online or I have to go to stores and there are fewer stores. So is it kind of like consumers are throwing their hands up in the air saying, well, if I want to live in the modern world, this is just what I have to accept?
Among the most tech savvy and privacy aware, probably. I would speculate that there's a large swath of the population that doesn't even think about it. But there are certainly some people that are making that, I guess, considered decision that this is what they will give up in exchange for convenience. Because you're right, in some cases there aren't other options. And am I willing to give up some information on my purchase history in order to get discounts at the local grocery store? Yeah, I am. Not everyone is, but most people are.
And I know this has changed a little over time, but have you seen any demographic information that says, certain people are more likely to give up that privacy? Digital natives, they've grown up with this. People who are a little bit older, maybe more skeptical, or maybe they just don't know. So as we've had more focus, more scrutiny on breaches and privacy laws, have you seen any trends or shifts even in those demographics of people who are a little more aware of what's going on and how breaches could personally affect them?
It's an interesting question. I wish I had the data in front of me, and unfortunately I don't. I think there are some demographic shifts, and there are also shifts between different countries. But I don't have the particular numbers in front of me, and I don't want to give you incorrect data. So I think I will probably leave it at that, and we can come back and talk about that at another time.
That's certainly fair. That was a question a little bit out of left field. So how do you think, we do have a couple of proposed laws here in the U.S. How do you personally see that playing out? Do you think we're going to get to a national privacy law, or do you think we're just too diverse as a country?
When Equifax was breached, what was that now, 5 years ago, 6 years ago? I think there was a lot of talk about national identity laws and a realization that maybe we didn't have the appetite for it. We seem closer on privacy laws, but I don't know. We'd have to get legislators to agree on much of anything at the moment.
And that's a totally different challenge and a totally different topic for a different time. Are you seeing, in terms of technologies and technology adoption, I was reading something else today about threat exposure management, some of the problems there. Are you seeing any specific industries that, or types of technologies, I should say, that are being more effective in helping companies prevent that breach? Like we know, for instance, AD is a problem, and therefore implementing certain types of controls can help mitigate that risk somehow. What are the top categories of controls or technologies that are more effective that companies should be considering implementing, of course, accompanied by good processes and people who know how to use them to mitigate breach?
I'd say it's pretty broad, but since I cover application security, I will say that when we look at Forrester data and we look at organizations and respondents to our surveys that have reported being breached due to an external attack, applications are one of the most common ways in, either through software supply chain, through software vulnerabilities, or even through various web vulnerabilities like SQL injection, cross-site scripting, and the like. The top way in that attackers had last year, the most reported cause of external breaches, was actually through software supply chain, and second was software vulnerabilities. So I'm going to come back to my particular love, AppSec, and say that a lot of application security controls, both pre-release testing to discover and remediate software flaws, and then post-deployment protections, whether you're talking web application firewall, API security, bot management, container security, and the like, are all going to be really critical to protecting the application, which is so often the way in for an attacker.
Yeah, AppSec sure has changed in the last 5 years or so, hasn't it?
It keeps me busy, let's say that.
I'm sure it does. And as far as AppSec goes and how people are looking at it, I think companies' attitudes have changed, because it used to be something where you thought you could do just a minor bit of testing and see if your apps were okay or not. But the whole landscape has changed. Especially as 2020 came around, but now that the world is entering a completely different phase, and people are working from anywhere, from everywhere. Applications basically run businesses now. Are you seeing more of that adoption on the developer side, or is it still being pushed by the security side?
So a couple of points on that. One, we're seeing developers much more involved in the decision-making on application security tools, and about a third of the time, they even own the budget for these. So we're seeing developers much more engaged in that process. The other thing that I will throw out as a piece of good news is that when security leaders are asked about their top tactical priorities for the coming year, application has been the one most cited for the past few years. And it was again this year that application security, improving application and product security processes, improving the tooling, all of that, that's the top priority among organizations.
That is good news, I think. I mean, maybe not if you're the one forking over the budget, but certainly good news for businesses in terms of trust and buyers in terms of risk.
It says they understand that there's a problem and that they're willing to commit the resources and the time to fix it. And that's a great step forward right there.
Job security for you, for sure.
I will not be bored.
Yeah, that it describes the whole market of security, right? It's one of the things I love about security is it never gets boring. There's always something day to day.
Yeah.
As evidenced by the fact that we never get through all the news items in our segment every week. Never going to happen. So you mentioned, we were talking about the adversaries, the types of attacks. I want to kind of pivot to that and talk about that for a little bit here. And, I think most people know these days that attacks tend to be boring in terms of techniques and how they get in. There's a few outliers, but typically, as you were saying, it's application related or phishing related, something like that. Like, I ask you to give me your password, you give it to me, and, and bad things happen to your company. I remember 10 years ago when nation states started hacking, started doing stuff like that, or nation state related organizations. We used to advise folks. We used to tell them, look, this is not something you have to worry about. You're not a target. They're not interested in you. You're not Lockheed Martin, right? How's that changed in terms of like what you look at for?
It's a good question, because I think what we're seeing is that nation states are going after firms in the country that they want to target. And so there is potentially a little bit more that one has to be concerned about. There is this notion of retaliation. So as the geopolitical landscape evolves, it is something you have to keep an eye on a little bit more. And we're also seeing, related to that, we're seeing changes in cyber insurance approaches, where there are a lot of clauses or riders or whatever that don't include nation state attacks as one of the things that's necessarily covered. So you have to look really closely at your cyber insurance policy as well to make sure that it accounts for that. But I think all that speaks to the fact, nation state actors are going to go after a much broader range of targets than perhaps they used to. They're not just going after the big national security targets, because their goal is to cause chaos. And, they don't have to go after all the big guns all the time in order to do that. So we are definitely seeing a shift there. And it does mean that smaller organizations who may have thought, I don't have to worry about this, now do. And they need to realize it's not necessarily going to be some big fancy 0-day or APT. It could be something as simple as what we talked about before, finding a stolen credential in a trove that's for sale and using that in order to then mount an attack in the enterprise.
So knowing that, would you say most organizations should be making a shift in their strategies for defense, based on that knowledge? If assuming some of these organizations still operate the same way that they did 10 years ago, which honestly, I depressingly find quite a bit.
I think they should make a change in their threat modeling, and they should consider the geopolitical threat as one which they must consider. In terms of their defenses, I think they have to look at a lot of the same concerns that, regardless of whether you're a nation state actor or some other cybercrime criminal gang, they use, in a lot of cases, there are very, very similar approaches. You're taking advantage of phishing, you're taking advantage of stolen credentials. So the defenses may not look that dissimilar, but there may be some things that, if your threat model indicates that you are potentially subject to some other type of attack based on where you sit, then yes, you should pay attention a little bit more.
And what can I do to pull the rug out from under some of these different attacks? Because, a lot of these attacks look very, very similar. I find a lot of the ransomware attacks, when I look at the details, it just looks like a pen test, up until the point that they do whatever the ransomware piece of the attack is. Everything before that just looks like your typical pen test. What could organizations do that would just kind of pull the rug out from under, or at least get them off of that list of low-hanging fruit that's easy for these extortion crews to get into?
There are some basics, right? I mean, some of the basics in terms of adding multi-factor auth, getting rid of username password as the only way, as your sole authentication information, some of that stuff. But I think also, in terms of your detection and your response, one of the things that we talk about in AppSec, particularly in bot management, is making the attack as expensive for the attacker as possible. And if we put up enough sort of blockers and defenses to slow the attacker down, we're a less attractive target than the company next door that's easier to get into. So there is an element in this of, maybe it's not running faster than the bear, it's running faster than your friend.
Right. Yeah, until Auto GPT just, yeah, well, we won't talk about that.
Oh, God, that's a whole other conversation, Adrian.
It's terrifying, right?
Well, the interesting thing, I was talking to someone about that, and going back to phishing attacks, one of the ways in which GPT has been very effective early on is a lot of the things that we're trained to look for in phishing emails are going away because GPT is pretty good at finding and, getting rid of grammatical errors or translating in an effective way. So it really speaks to the need to not force the user to be the single point of defense.
Right. And if I can be permitted to ask a really, what seems like a really dumb question, but I'm really curious about, what happens to these huge GDPR fines? Does Luxembourg just have like the most perfect pothole-free roads in the world, or wherever the EU head?
It's a good question. I'm not sure.
I'm just looking at these numbers. I'm like,
yeah.
What are they doing with it? Like, surely
I have
some
to
of
assume they're funding other initiatives with it, but I've never looked at it.
Right. Yeah. Yeah. It's something I've always wondered. I'll have to look up at some point. But yeah, another trend here that you mentioned in the report is fines and punishments get personal is the name of the section, which is perfect.
Yes.
But yeah, and most people know about the Joe Sullivan case, but not a lot of folks know about Drizzly's CEO getting personally sanctioned by the FTC. Maybe let's talk about that a little bit. Like is that, or we've got two major cases here, are those outliers where they're just trying to make an example, or do you think that's going to become more common?
A couple of years ago, we couldn't have imagined any of this happening, right? And now we're seeing at least a couple of the examples where, a CISO is being deemed to have personal blame liability for this. A CEO is being sanctioned. A CEO is being sanctioned not just for the current company, but for where he goes afterwards. So it's not just even limited to the current position, but it's going to follow him around. And obviously, it's only a couple of examples right now, but it's enough to force CISOs to pay a little bit closer attention to their exposure and their legal coverage and realize that they may need their own legal support beyond what the company has. It also means that the CEO, since they start to see these examples, they're going to need to and want to be much more engaged and aware in their organization's cybersecurity strategy. So you're going to start seeing CEOs asking more questions of the CISO, and we are seeing a trend. Jeff Pollard has talked about this in his research. We're seeing more CISOs report directly to the CEO.
Yeah, definitely. Yeah, and I also seen a trend where you have CIO/CISOs, where they, it's the same role. Yeah, which also reports directly to the CEO.
So
and I think the question,
this changes the paradigm a little bit. People who are looking for CISO positions, they have a little more to think about. Again, limited examples, but obviously this should not be something that people disregard either. So does this change either the training, the pedigree of somebody who is a CISO? Does this change how we bring people up through the organization or the skill set? What does this do at a practical and tactical level?
I think it changes some of the due diligence, honestly, Katie. I think, if you're going into a potential CISO role, you're going to have other questions to ask in terms of liability, the company's investment, what kind of support you're going to get, because you don't want to be the one left holding the bag. It was one thing to be holding the bag and just be fired. It's another thing to be holding the bag and be fined or sent to jail.
Right. Very much so.
So yeah, I think it does cause some more questions to be asked. I think it forces you to do some more due diligence in terms of what you're actually getting from that role and the support you're going to get from the CEO, from the board. It may even force you to demand that as a condition of taking on this role, I must report to the CEO. I must be allowed to report to the board on a regular basis. It could force some more of that type of governance as well.
And in turn, if those conversations are happening regularly at the right level, does that ultimately help cybersecurity evangelize our agenda better? Does it help us get that bigger seat at the table? You know, we're still pushing for it. In some areas They have it, but in a lot of other areas, you know, Adrian just put up a statistic on our internal Slack. 47% of CISOs at global organizations with more than 1,000 employees now report to the CEO. That's great. Yep. But that means that 53% are not. So does that change how other C-levels and boards of directors look at security? If people who are candidates for CISO positions are having those much, much more serious conversations about ramifications and repercussions?
If we're doing it right, yes. If we are articulating the stories and telling them at the right business level, if we're providing metrics that are relevant to the business, relevant to the CEO versus something that's relevant to the security analyst, if we're really talking about how the security team is enabling the business, helping to drive revenue, I often write about securing what you sell. And in the product security realm, that's about putting in the right security controls to enable the sale and enable the business versus things that are going to block it or slow it down. So I think if the CISOs that are starting to report to the CEO start to position themselves as more of that business level CISO and customer facing CISO, as my colleague Jeff Pollard talks about, then you will see more CEOs and boards start to look for that skill set and embrace that from CISOs.
Yeah, so up-leveling ourselves to up-level security organizationally.
Learn to talk about the customer, learn to really be engaged with the customer, and learn to communicate at those business levels.
Know your audience.
Yeah, and the interesting thing about the Drizzly CEO is part of that sanction is to reduce, for any company he works for, I think in the next 20 years or something like that, it said, like two of the three big things were privacy related, was reducing, the amount of information gathered from customers to only what's absolutely needed for business, which, seems like it could make it hard for you to get hired, hard to take a CISO role of a company when you're carrying that kind of baggage around and other people don't.
Yeah, I agree with that. I do think having some sort of having that level of weight following you around. I mean, regardless of what role you're in, even if you were a CEO and you were, it wasn't a security issue and you had some sort of result like this where you had to have additional reporting or you had to have additional compliance in order to fill that role, that certainly makes you less attractive as a hire, doesn't it?
Yeah. Or as a founder, trying to raise investment.
Yeah. Oh God, yeah.
Mm-hmm. Yeah, pulling that boat anchor around. Sandy, is there anything else in this report that we've missed that you're like particularly excited to talk about, or that you want to touch on before we wrap up here?
Let's talk about Australia for a minute, shall we?
Absolutely. I love talking about Australia.
Interesting thing, if you look at the top breaches from last year, 5 of the top 35 were Australia. And almost all of them were in Q4 or the tail end of Q3. And so we had this, and you probably remember a lot of them. Everyone remembers Optus. And then there was MyDeal and a couple of others where there were a very large number of records exposed in a very short time and a couple of really prominent breaches. As a result, Australia did the thing that you were asking about earlier. Australia put in place, stronger data breach laws and punishments around that because they saw this pattern and they wanted to stop it. But it was really interesting to see that where they had this pattern of a couple of very high profile breaches. After the US, they were the country that appeared the most in the top 35, and they responded to it. And I think it's a really interesting example of seeing an issue and looking for ways to try to address it.
Probably too early to tell if they, what they did had an impact.
Agreed. I think we'll need to wait another year or two to really see what happens. I haven't heard of any breaches so far this year, but that's a really small sample size, and these things tend to come in patterns. I also suspect that a lot of companies got really spooked after the first round of breaches, and they probably tightened things up quite a bit proactively.
Is this a report that you do every year? So will there be another one of these next year where we can kind of like compare, do some
that is the plan, yes.
Yeah. Okay.
It's a team report. We have, I think this one had 6 or 7 authors, and every year a group of us will come together. It may be me, it may be somebody else, but we'll work together to comb the breach data, look for interesting trends, and then figure out what are the really interesting lessons to take away from it.
Very cool. Well, thank you for coming on and talking to us about it. This has been really interesting. This is a different way of looking at breaches, like with the privacy stuff included that I hadn't really done before.
Well, thanks for having me. This was a lot of fun.
Absolutely. And stick around. We'll be right back in a few moments with the weekly enterprise news. Do the words free time or relaxation sound foreign to you? Perhaps you've been stuck in the office too long, battling cyber threats or worrying about the next strain of ransomware. Let Sophos help provide peace of mind 24/7, 365 with cybersecurity delivered as a service. Because we want you to get back to your weekends, family dinners, and everything in between. And you'll get there with Sophos. Visit securityweekly.com/Sophos to learn more. The cybersecurity landscape is full of single solution providers, making it easy for unexpected cyber threats to sneak through the cracks. That's why Forger is creating a stronger, simpler strategy for protection, one that increases your security maturity while decreasing the operational burden that comes with it. This is all possible thanks to Forger's best-in-class portfolio and deep bench of expert problem solvers. Forger's integrated, scalable solutions help customers face their toughest challenges with confidence. Learn more at securityweekly.com/Fortra, Fortra. Welcome back to Enterprise Security Weekly. Join us at an upcoming official cybersecurity summit in a city near you. This series of one-day, invitation-only, executive-level conferences are designed to educate senior cyber professionals on the latest threat landscape. We are pleased to offer our listeners $100 off admission when you use code SECWEEK23 to register. That's SEC Week 23. Visit securityweekly.com/cybersecurity summit to learn more and register today. Now for the enterprise security news. And we have Mr. Tyler Shields, fractional CMO, part-time investor, and fractional podcast host with us now.
I'm a fractional everything these days. I do a little bit of everything.
We are happy to get a piece of you, even if it's only a fraction, Tyler.
Oh, Adrian, thank you. I'll remember that.
I look forward to it every week. I'll
send you the good piece, my friend.
I'll take what I can get. Yeah, lots of interesting stuff. I'm kind of eager to talk about here. As usual, AI is going to dominate some of the conversation here, but quite a bit of funding and a couple of acquisitions here. And I think we're going to continue to see a lot more. I know there's a lot more stealth companies about to come out with seed, even after RSA didn't quite make the pre-RSA announcement train, but we'll see them afterwards. And I'm curious to see how many more acquisitions we see. And this is something we didn't really get a chance to dive into as much with Ernie earlier. I meant to ask more about. What if there aren't enough acquirers for all the companies that need all the distressed sales that need to happen, maybe Q3, Q4 this year. I don't know. Is that coming?
That is coming. Yeah, it definitely is. My prediction is that second half of this year, we're going to see a pretty big uptick in M&A. And I'm sure that's what Ernie had to say. I didn't get a chance to see the interview, but I'm going to guess that he said something similar. Certainly feels like everybody's circling that second half of this year kind of M&A model. I actually met with a couple of investment bankers this week trying to get a couple of deals sold off, and that's what we're hearing everywhere is, yeah, it's been a slow first half of the year, but second half of the year should spin up. Now, to directly answer your question, I think there's a very good chance of some mortality coming into play as well. Some companies just not making it. They don't have a strategic exit opportunity. Nobody wants them. They might get sold for, pennies on the dollar for an IP acquisition type of thing, and that's it, right? They just wind up. So, yeah, it's going to be an interesting second half of the year.
Yeah. Yeah, I mean, we've already seen a few examples. Interestingly, I didn't get it pulled in here, but there are some kind of late-breaking ones. ZeroFox picked up, let me find it real quick here. I meant to get these in and didn't quite get there, but ZeroFox picked up Looking Glass for 26 million, a third of it stock, the rest cash, and Looking Glass had raised 119. Like that's wow. A pretty, that's an ouchie.
That's a massive ouchie. I don't even know where to begin talking about that one. I feel bad for the people that were involved in it.
ZeroFox is on my. ZeroFox is on my. Are they going to get delisted? SPACs from 2022 that might get, or 2021 that might get delisted list already. Like they're hovering just above $1 on the NASDAQ.
Yeah, I mean, to pick up $120 million of invested capital for 26 is just absolutely crazy. And then, put yourself in the shoes of the company selling, that your only option was $26 million to a company that likely is in deep trouble itself. Like, it's a pure fire sale, pure liquidity.
Yeah. And it says the deal is mainly in stock. Looking at the main article here, which I should have dropped in the Slack here. But yeah. I mean, signs of what's to come. I'm thinking when I see stuff like this.
Yeah, I'm not sure who did the early stages, but Series A, B, C, D, as listed on Crunchbase, has a bunch of investors I hadn't necessarily heard of before: Alsop, Louis, Newberger, Eastward, New Spring, Triangle Peak, Peninsula, like Vital Venture, a bunch of them that I hadn't heard of before. It doesn't mean they're not, impressive, important firms. I just haven't heard of them before. So that also has a tendency to play into it, right? When a company is invested by Andreessen, Sequoia, like the big boys, they're going to find an exit when the time is right. They're going to make sure that happens for their capital. It sounds like that didn't happen here.
Yeah. And since we're talking about acquisitions, Maltego has kind of an interesting history that I had to catch up with here. Was a small South African company called Perturva that made Maltego. Very much a no investment, bootstrapped tool that they gave away for free. Then they started charging money for it, kind of like Burp Suite. How Burp Suite just kind of emerged from 1-2 employee company, then grew from there. And somewhere around 2017, I don't know where the German connection came in, but they formed a German company called Maltego. One of these cases where they took the name of the most popular product and adopted that. And then 2018, I think they separated ways, and Maltego became a separate entity that was mainly just run out of Germany. And sound like they sold the business there, and now it sounds like that business has been sold to a PE shop for $100 million.
Yeah, I remember Maltego way back. I think it was Maltego, anyways. I was pretty impressed by what they were doing. They were doing some really unique stuff, but it was all the community stuff back in the day, if I recall.
That's a good exit for a bootstrapped application that requires you to install a GRE.
Absolutely.
Yeah, I haven't seen a piece of pure Java software sell for this much since I think Minecraft was the last thing I saw. That was just a pure Java sell for this. Yeah, to Microsoft. But yeah. I mean, as in this market, for something with no, a company that I assume had very little to no debt, that's pretty good.
You know what? Those are the ones that are going to exit well, right? The ones that are healthy, little debt, and I don't know the debt scenario here, but healthy, very little debt. Some matching to pure revenue that has a nice high margins. Like those are the ones that'll give you a good multiple. Now it's what people are shopping for. They're looking for free cash flow.
Yep. Then the other big acquisition here is RSA selling off Archer. So, and this isn't surprising because this is STB, I think is the name of the PE shop that picked up FireEye and McAfee and RSA and like all these old incumbent security giants and has just been parting them out and selling them off.
Yeah, Cinven picked them up.
Yeah, and I think that's another PE, maybe? It's a PE
to
PE.
Sure it is.
Yeah,
this is a PE to PE. This is one PE firm going, hey, I think we got all the blood out of this tournament. Turn up here. You try and squeeze it for a while. That's what the trade was.
check out this comment here. So one of the partners and head of North America at Cinven at this PE shop says, this transaction exemplifies Cinven's ability to deploy our differentiated sector country matrix to carve out and invest behind high growth businesses. And I'm not going to read the rest.
Oh my goodness.
I can't parse that. That broke my brain.
Yeah.
And
wow, that's a lot of
the
words.
part I cut out is the part that makes sense. Position them for long-term success as standalone companies. Okay. That part I understand. I don't understand the differentiated sector country matrix carve out.
I'm sure they do. It's one of those scenarios where a PE firm created something proprietary, gave it a proprietary name, and now they're using it publicly as if the world understands it.
Yeah. Just like internally, everybody gets it. Yeah. I constantly advising companies on that. Like, no, don't use normal words that people will understand. Like, you got to step outside your bubble a little bit to read your own stuff.
That's right.
Let's see. ID.me, which interesting company. One. Yeah, big one, huge. Every time I log into my IRS account, I use my ID.me account to do so. They've got some huge deals with the federal government there.
Talk about brand marketing. Literally everybody on the planet who doesn't write a check the old school way, pretty much everybody these days is paying online, and they all see that brand pop up every single time.
Yeah. Yep. So they raised what did they raise? 132 million in Series D funding.
They have a digital identity network with over 100 million members. Here I am. I'm a little tired. Sorry about that. Over 100 million members. That's massive. 100 million IDs being managed by these guys.
And most of those, I assume, are U.S. citizens logging into the IRS.
Pretty much going to be all of the U.S., I'd imagine.
Yeah. So I mean, that's what I'm curious about. With like, I recently heard that ZeroFox is kind of in a similar boat where the federal government is like 50% of the revenue. I wonder what percentage of it is for ID.me. I suspect it's probably a similar situation, right? Like half of revenue or more.
Yeah, between state and federal, yeah. I don't know. Do you know of anybody else that uses ID.me for any kind of identity management? I can't say I've ever seen it anywhere else other than the federal government's website.
Customs and Border Patrol does.
So anything.gov.
Anything.gov. I think I've seen it a few other places. I know I have it in my Authenticator app.
Mm-hmm. I mean, a niche is a niche. I'm sure those are long contracts.
It's a massive niche.
Yeah. All right. Spectre Ops raised $25 million. Which
they seem to be the buzz of the town right now. Those guys. I keep hearing them from lots of different people these days.
Yeah, I know some folks who are over there, and this is always so. This was what I mentioned before, Tyler. The reason I brought up, whether or not we're going to have enough acquirers for all the companies that need quick exits is because we didn't talk about that with Ernie in the first interview. But what we did, one of the things we did talk about, because he's one of the investors in Bishop Fox, and I forget one of the other ones. He's got a couple investments that are, what was he calling it, Katie? Tech-led services, tech-enabled services.
Yeah.
Yeah. So basically,
saying they wouldn't invest in anything that was strictly service.
Yeah. So yeah, this is interesting to me because I think Spectre Ops is in this category where it's services plus software, right? Like the Arctic Wolves, the Red Canaries out there. What do you think of this market, Tyler? It seems like there's It's a pretty huge segment these days.
Yeah, it's interesting. The reason why VCs don't typically invest in pure services companies is because the multiple of exit generally isn't there. Because you don't get the leverage of having to write your code once and just have it work and be sold 1 billion times, right? You actually have some kind of services always boils down to some kind of human being in the loop, which, diminishes your scale and eventually diminishes your margins. And so that's why most VCs won't touch services companies, or if they do, they give them a much, much lower multiple. Now, my understanding with Spectre Ops is it's a combo platter, meaning it's tech, but it's got some services wrapped around the tech. And that can be okay for a couple of different reasons. One, it can be okay because you have the ability to scale based on the technology that you're using, as opposed to just having a pure services business. But not only that, many times the human component that's layered on top of the technology business is literally used to improve the technology business as a feedback loop, right? And if that becomes successful, the services businesses becomes a smaller percentage of overall revenue as the product becomes dominant in the model. And I'm not saying that's what's happening here. I don't know their world very well, but likely there's some kind of technology here that makes sense to have a reasonable investment go alongside of it.
Yeah, and it looks like it's Bloodhound Enterprise. So I think Bloodhound was originally just an open source tool that was attached to them, and they've turned that into an enterprise product, kind of like Rapid7 did with Metasploit.
Yep.
It's got its own domain and brand and logo and everything.
Yeah, and that's typical, right? And so they're wrapping services around it to increase the revenue, and their services are going to help make the product better, and I presume not only make the product better, but make a pay version of the product that essentially forks the open source and improves it dramatically for large enterprise buyers and things like that.
Yep. All right. I just love that there's a privacy tech startup, number 6, named Oblivious. That gave me a chuckle. But yeah, I love seeing all these
5 million euros.
I love seeing all these companies, all these non-US companies doing raises. Like more and more, it's like, a third to half of our funding announcements are outside the US. And this one is, they got the euro symbol there. I don't remember. So Berlin-based, Germany-based, which makes sense. Privacy tech startup, either Switzerland or Germany. And then another one, there's an Indian company, Safe Security, raised it's another one that I missed on here, $50 million Series B, which is huge for an Indian security startup. Usually those are smaller raises.
The hard part about investing outside of the United States is the transition, right? You have to make sure that the addressable market in the local region is sufficient to scale the business to enough growth, because the transition into another market is never guaranteed, no matter how good you do in your home market. Just like US-based companies, transition to Europe is not an easy jump to make, and European-based companies trying to transition to US sales is not an easy jump to make. It feels like the only ones that are highly successful at that and can do it regularly is Israel. And I think that's because they've done it enough now that they've written and created playbooks and understand exactly the steps to succeed. Although in communications I've had with a number of Israeli startups recently, many of them are forming their company now in the United States and then headquartering their dev in Israel and making the company actually be a US-based company, specifically because of geopolitical issues, taxation issues, and things like that are happening in Israel right now. And they're finding it easier just to say, hey, we're a US-based company first. We'll come to Israel.
Taking investor money, if the investors are US-based investors, is a big reason for that, right?
Yep. Yeah, it has a lot to do with it. And then add this taxation and growth issue that the Israeli political scene is layering on right now. Just makes it a no-brainer to be US-based first.
I can think of a few companies that are, don't really serve their domestic market as much as others. Like CrowdSec was one that's a French-based company that I think the U.S. is the majority of their revenue, and Thinkst is another one where the majority of Thinkst, they do business everywhere, but the U.S. is by far, I think, the biggest piece of it. Not to say that they don't have domestic, they don't have customers next door, but it's I think proof that you can, in this age, you can build a company anywhere and serve other markets. Which I don't know if Safe Security is. The press release says Palo Alto, California on it, but to your point, it's the same thing with Evident. Was it Evident.io? No, it was. I'm going to blank on the name. It was a Casby, but Rehan Jalil, all of his companies, he's Pakistani. He tends to have a lot of his devs in Pakistan, but they're always U.S. based companies. Trying to remember the name of his current startup after he sold the previous one. My brain is starting to melt at this point in the week.
And just imagine next week is RSA. Enjoy that.
Melty. Yeah, I'm going to have to get a lot of sleep between. Well, I'm not going to. I'm going to fly out tomorrow, go visit my sister, see my new niece, who's 4 months old now, I think, and hang out in Dallas for a day, and then fly on to San Francisco, which is actually half the price of flying directly to San Francisco, doing like Knoxville to. Yeah, I don't. Airline prices, how they work. Let's see. Rehan Security is the name of his current startup. Security with an I. Elastica was the previous one. It got sold to Blue Coat.
Right. Yeah. So what do we think about Newcos? Strike One, Inside Out. Have we looked at those ones yet?
Nope.
Number 10 and 11 on our list today.
Yeah, so Inside Out, I want to say is that the deception play? No, that's privilege abuse. Yeah.
So interesting. I feel like, I was reading recently, and now here I am not seeing the previous Forrester Analyst segment as well from Sandy, but I was reading a bunch of trends stuff this week, and one of the biggest trends in cyber that was mentioned by, I think it was Gartner that was talking about it, but it was all about identity-based cyber. Identity. It feels like that there's a big wave of that kind of stuff coming through. Now, sure, privilege abuses, inside-out defenses, whatever this company InsideOutDefense.com is doing. Who knows if it's truly like identity-based, but it certainly seems to be permissions, identity, tracking auth, tracking connections, over permissions, under permissions, things like that. What's your take, Adrian? Do you think that kind of this new identity-based approach to cyber is going to reinvent anything? Or are we sitting on a buzzword bingo scenario where it's like, hey, it stands out, it's different, it's something people can rally around, even though fundamentally there's very little difference in execution?
I mean, you got to follow the tech industry and how they're doing things. And that's kind of core. And I suspect this is why you served this up to me, to one of the use cases we have at Valence, which is like the idea of decentralization, and it's happening even more with the ability to use AI to write code, where you have people outside of IT and tech and security all together who end up being the admins for this stuff. So all of a sudden, some random person in HR can sign up for a new service. Nobody knows that they've done it, and how are you going to do privilege management on a product you don't even realize people are using? I'm one of the worst persons about this. Like, you discover all of a sudden 20 people in your organization are using Notion. It's probably my fault if I'm in that organization.
That's funny.
And yeah, any of us can just pump all this internal private data into Notion, and super easy to hit that share button and say open to web. Like, I've seen companies use Notion as like a mini website, like a wiki type of use case.
It's crazy what you can use Notion for, Adrian. I've got one young cyber company that I won't mention, very, very young company, that I asked them what they're using for their sale. I asked them, I was like, can you guys show me your weighted pipeline or your pipeline for sales? And they're like, sure. And we're on a shared screen. They open up Notion and they show me a Notion database. They were using Notion as their entire sales process funnel, weighted, unweighted, like all of it was in Notion. And it's like, yeah, that could work, but do you want to be the maintainer of a Notion CRM? Not only the CRM data itself, but also how it all works. Like that to me
You
seems
can buy
like
packages. You can buy pre-built templates to use Notion as a CRM.
oh my goodness. I mean, I think it's a little much. Don't get me wrong. I love Notion. I use Notion for the Cyber Y on a weekly basis. Everything that I read gets auto-populated in Notion. Notion AI gives me summaries and snarky jokes that I can choose from in case I like them. Like I have a workflow directed in Notion for the creation of the Cyber Y on a weekly basis. So I love it. But why reinvent the wheel when you could just buy HubSpot? Like I don't quite understand why you'd want to use that as a CRM.
Is it a significantly lower price point?
Of course, but it's significantly more maintenance.
It's pretty cheap though. HubSpot's not crazy expensive.
Well, it is when you get bigger. It grows non-linearly with you. It grows way large as you get bigger, which becomes very cost prohibitive. And that's why they chose to do what they did, which I respect, but I'm still trying to figure out the weight of the debate between the total cost of ownership when you now have to maintain that database and make tweaks, and what happens if you want to add a property to a field or change your process within your sales funnel. Like it's not meant for that. You'll have to re-engineer it all every time. So, but anyways, we went down a rat hole right there. I also want to bring up another point here on strike one. I think it's either 9, 10, or 11. I didn't look. This is another trend I'm seeing too, right? Besides the other trend, which I just identified with identity first. Another trend I'm seeing is the, for lack of a better term, let's call it the amalgamation. How's that for an SAT word? The pulling together all sorts of data and kind of taking analyzed data that exists in other silos and doing a meta-analysis over the top of it, a la JupyterOne, Exonius, and others, right? Kind of pulling in findings, pulling things together. But this one's kind of interesting. It says, carry out a cybersecurity assessment in real time as many times as necessary. So the messaging's a little bit confusing in the sense that part of it's like, hey, we're a continuous pen testing and assessment firm looking for configuration gaps and vulnerabilities. Okay, that's one offering. But then when you go to their main site, it's also talking about, overlaying frameworks. And so is this the, centralize all your preferred tools using a Strike One platform? So taking information from all of your common tools. It's a very confusing message, but it feels like there's a theme I'm seeing in pitches I'm hearing consistently right now is, hey, we connect to these 20 things, pull that information in, and give you meta information on top of it. Curious if you guys are seeing a similar theme at all.
I mean, this is just AppSec vuln management is what I'm seeing. SAST and DAST.
Yeah, but I think in terms of the larger theme here, I mean, everything's all about interconnectivity. Everything's all about, aggregation and correlating the data. Everything is all about simplifying what you have, so that's been a theme for a while, and it's really just due to the fact that companies have so much technology. We are decentralized. There is no perimeter, all the stuff that we've been talking about for a really, really long time. And it goes back to your favorite term, Tyler, zero trust, which also gets back to the identity thing, right? Because if you have this distributed workforce, if you have all of these applications, some of which, the company may not know about, if your users are just going out and they're buying ChatGPT on their own, well, that's Tyler, you don't work for a company anymore, but, if it's stuff like that, then it really has to be all about finding out where your users are going, what access do they have, what permissions do they have, and unless there's if there isn't any kind of interconnectivity and visibility, then you're kind of screwed, and that does bubble up to vuln management, which bubbles up to risk management and gets back to the business use case. It's that funnel.
Yeah. Well, not only that, if you click on their website, there's no sign up now. There's no show me a demo. There might be a show me a demo on some of the pages, but at the top of the page is deal registration. So clearly they're a channel first play. They're based in Miami. And if you click on deal registration or the docs, it's en Espanol. So I hope you speak Spanish.
Yeah. Yeah, it's interesting that's a little bit of an oversight there, but this is these guys are seed or pre-seed at this point. When I say new companies and they're on this list, it's usually like they've got a couple 100,000 or something like that. Like, and I didn't even bother share the like, I could have slapped funding on there because that's ultimately where these new companies came from, but they're super early stage.
Yeah, you're not going to run out of zeros typing their funding size.
But yeah, all these guys are going to run into good enough, so like there's a lot of overlap here. Like a lot of the stuff they're doing, GitHub does that. I think GitLab has some of that functionality in it also. Like once you get to a certain size, maybe you want to tie it all together and have like a platform single pane dashboard type thing. But I don't know, that creates other problems. And they're also doing some like config management, CIS baseline stuff here as well. I just don't see that happening. In what I imagine to be their ICP, I think it's a hard sell, especially in this market. I don't
it's interesting. Yeah, I think at the end of the day, they're going to be in the RSA conference early stage expo. I think Inside Out Defenses, anyways. I'm not sure about the other one. You know what? Good for them. And I like that term you use. They're going to bump into, or they're going to run headlong into good enough. And that's a that's a problem with a lot of these companies that I talk to in early stage. They don't quite understand that they have to be massively better than something else to win these days. You can't, otherwise you run into good enough, and people aren't going to rip and replace. People aren't going to buy something new if they can get something elsewhere that's good enough.
Well, in this, like if you look at Mob, the other new company that I've got here, number 9, I think it's got to be like a PLG approach. It's got to be super good. It's got to have I don't even want to talk to a salesperson. Just let me try out the tool. And if I can't do a POC in an hour, then you're not going to be sticky. You're going to have a hard time getting traction.
Yeah, and maybe that's an interesting point, Adrian. When we talk about the companies when we think about the companies we've spoken about today, the younger ones, there's not a massive amount of differentiation, but is there a commoditization occurring in many of these markets where they're like, hey, we're just going to be cheaper. We're going to be, click here to get it installed. Yeah. And we don't have to technically differentiate if we can differentiate on ease of use and just getting it working. And then we can charge a quarter of the price. And we say, bootstrap it, sell the company for 20, 30, 40 million, all in the founder's pockets. Like that's a very interesting play, I think, in today's market, if you wanted to buck the traditional, seed A, B, C, D approach.
And like this one, mob.dev, it's another DevOps AppSec play. Like if I don't try out this tool and say, holy shit, I wish SemGrep did this, then, you got a tough road.
Yep.
But there's got to be it's got to really wow you, because there's just tools like this are a dime a dozen. There's some good open source stuff out there. And the ICP are, I've got to imagine, are like hyper growth, hyperscale startups and stuff like that, which is a tough market to sell to. They're just going to use whatever works.
Mm-hmm. They're going to use good enough.
Yeah, exactly. Especially when you consider all these tools like the, particularly like Mob looks like an easier one. You can just grab it, download it, use it. Very low friction to get into, but Strike One, a lot tougher. Like it looks like there's some management to it, some overhead. Somebody's going to have to own that tool and manage that tool. And that's just really tough to do when you're trying to sell the DevOps teams.
So given that thought process, Adrian, is PLG a possible disruptor? Fundamentally, if we think product-led growth and that bottoms-up approach and community model, I'm working with another startup right now that is, their GTM is very bottoms-up. Like they allow hands-on creation of rules and SIGs and things like that, and it's very bottoms-up. Does that work in today's cyber buyer approach? Or, I guess yes. I'm still worried about that execution engine.
Yeah. No, I mean, and I think you've been bringing it up a lot, but Sublime is a great example of that. I'm seeing Sublime everywhere, every single day, because somebody's just personally jumping into it and playing with it. And does that work with a product like that?
Yeah, it's going to be an interesting thing to follow. I wish the companies, all the success on that approach, because I think it's a super interesting approach. It's just you have to figure out how to match that with maybe a tops down that simultaneously matches. There's a lot of moving parts in that. But yeah, anyways.
Well, the network effect is almost contagious, like it's that thing where it just shows up. Like nobody told somebody to post about using Sublime or Material, is another great example in that kind of that same category. They've made the product good enough to where people are like, wow, holy crap. Like those words leave their mouth and they go to a Slack, which is Slack and Twitter, mainly where I'm seeing people talking about using this stuff. Somebody just wrote a blog post. I think we have a blog post here, just somebody using Sublime and saying, wow, like this is pretty cool. Look at what I did with it. I don't know if
the technologies, and again, I don't want to specifically call out names here, but the technologies on some of these companies that we're talking about, Sublime Material and others, are badass. I mean, they are super cool, super disruptive, super innovative, but how do you bring them to market in that model? And I wonder if there is like a really cool play where it's like a joint GTM approach between Sublime, Material, insert company X, like, and Mob might not be a great example here because they're too young, but something that's like that very young, very like SecOps, build it yourself approach, and pull 5 or 6 of them together and work together, like create some magic as a full stack approach.
Yeah. I'm just looking at my story number 17 is the one where it's just oh
yeah, there's Sublime right there. Yep.
Yeah, and I if this is you doing some guerrilla marketing, good job. If you're Mino Kim secretly.
No, I am not Mino Kim. But no, I love the technology that Sublime is doing for sure, and they're getting a lot of really kick-ass buzz right now. They're starting to get a lot of people talking about them. The word is getting out what they are capable of, and really what it comes down to is allowing. And again, I'm not trying to shill for Sublime here. What I'm getting at is technologies that allow innovation from the user community to do something that may not have ever been intended by the original design of the product. That's when stuff can get super interesting at a community basis, because they can say, look, I've got a tool. It's meant to do 1, 2, and 3. But if you do this with it, it does A, B, and C as well. And then we can tweak it over here to do, square, circle, and triangle. And all of a sudden, you've got so much more value than what you originally intended in a product like that.
Yeah.
And I think, one thing that should go without saying, but kind of doesn't, is that if you're going to take this approach, if you're going to take a product-led growth, free trial type of approach, whatever you're building has to be so simple that somebody doesn't need to call or contact your customer support. And I think that's where a lot of companies miss the boat on it. Like I said, it should be obvious, but I think a lot of companies, when they're putting out these free trials, putting out these free environments, sort of have it in the back of their head, well, if they have to call us, if they have to contact us, that's a marketing lead, a different kind of interaction, a different kind of marketing lead, where the best tools and the best product-led growth campaigns are really that simple. If it means simplifying the product and the experience a little bit, just to get people familiar and comfortable with it, I think that's where things start to happen. That's where users do the types of things that you said, Tyler, like try it out in a way that maybe you hadn't intended, and maybe that becomes a new avenue for you, a new module, a new whatever. But I think a lot of companies still want to control what they're putting out there so tightly that the trial or the experience of whatever it is still too complicated, that if you need a user manual, you're probably not doing it right. And you're probably not going to get the viral effect that you're looking for.
Yeah. And it's I mean, let's face it, like go to RSA, walk the expo floor, but for the rest of the year, like tune a lot of this stuff out. Like most of the market's a distraction. Most of the market stuff that you don't need, And finding the really good stuff in there that's worth spending your time on is tough. I think most interactions, people are thinking, all right, how much time am I going to have to invest in this before I find out I can't afford it? It doesn't fit in my budget. I can't use it. I can't hire the 3 additional people I need to run it. Like how
and
do
it takes 7 years to deploy.
How do I shorten the amount of time it takes for me to get to the information I need to make that go, no go decision? And companies that shorten that time for you, where like that was a huge thing back at Thinkst, is we just had the calculator on the site. Like, it was intentionally priced to make you think, why wouldn't I buy this? Like, very low price point, very low time investment to get it up and running. And it's an extreme example. I think most security companies can't do that. But where you can, the sales cycle's a week. Right? It's a 30-minute demo, and they're either going to buy or not. Yeah. So we see more and more companies that that build around that, because even if it's a good product, if you can't get somebody to talk to the salespeople, to go through a POC, if implementation time is long, it's just a tougher sell, I think, in this market, especially when products that make it easier exist. So speaking of sales cycles and companies with good customer service, Comcast now has a security product. And we know all about their legendary.
Tyler was a little slower
Number 13, wow. Comcast Technology Solutions launches DataBee, the DataBee platform based on, I think it sits on top of Snowflake, to enable large enterprises to effectively manage enterprise security risk and compliance. And it seems like it's a SIM.
Cloud native data fabric for security risk and continuous controls monitoring. It's bigger than a SIM.
I mean,
I bet you it's got config data as well as event data.
Okay, it's a next-gen.
It's also still Comcast, no matter how you package it.
Oh, at the end of the day, I'm not confident it's going to work just because it's attached to the Comcast brand. But conceptually, in theory, I think the idea is right? Is some kind of security data like data fabric that has events, vulnerabilities, and information that are happening, right? Like actionable things. That's your SIM side. And this is the Jupyter One value prop, right? But having all of that and then connecting it with contextual configuration and state data about the environment. And when you do that, you understand the issues, the vulnerabilities, the flaws in such a deeper, more effective way. And the best way to do that is to have a large data lake of all of the context. It's a natural fit to then layer on AI as that becomes more powerful. And the real question is, can Comcast actually, target that vision and execute against that vision? I'm not convinced in any way.
I mean, if their customer service is as good as their commercial product or their consumer product, then it's, obviously they're going to be the next gazillion-dollar company, right?
Of course.
And talking about overhead, like this is as far as you can get from the AppSec DevOps companies we were talking about. Like, this is, minimum 3 FTEs to manage this thing, I'm guessing.
Yeah, I'm not even sure.
Fortune 100 ICP, large finance type companies. Yeah.
And then a fourth to wait on hold for their customer service rep.
Exactly. So, and speaking of drama, number 14, cybersecurity firm Zscaler loses coveted spot in Gartner ranking due to sales arrogance. What a title.
Cyber drama of the day.
By Kevin McLaughlin at The Information, which is a very expensive publication
It is. And when you sent this out, I was really, really interested in this, and I was all over it. But then you go into Gartner and Zscaler's there. They're just, it's not.
No, they just said they're bumped down from leader to challenger.
Secure Web Gateway, because there is no Secure Web Gateway Magic Quadrant anymore.
Repeat, Adrian. I think we couldn't hear you there. Repeat what you said.
Yeah, it didn't say that they they lost. By lose a spot, they mean like they're no longer in the leader quadrant. They're in the challenger quadrant.
But weren't they in the leader quadrant?
Yeah, that's what they're saying is they got downgraded from leader to challenger. And same thing.
When you look at the Secure Service Edge quadrant, the one that's on the site.
I can't look at it.
I think they're still in the. Yeah, they're in the leader quadrant for Security Service Edge. They were not downgraded.
It says in a regular update about the best positioned firms, Gartner ranked privately held Netscope ahead of its publicly held rival Zscaler.
Okay, so it wasn't.
So the story is that
but they're still in the leader quadrant. Yes, Netscope is a little bit up and to the right, but this is a little bit of a clickbait title. If you click on it, and if you've paid the $750 a year to subscribe to this media outlet, it's a little bit of a clickbait title to say, they've been, quote, downgraded. Okay, maybe they are not the leader. They're still in the leader quadrant, and maybe they have sales arrogance. I've never interacted with a Zscaler sales rep, but yeah, this is intentionally clickbaity.
Oh, it's clickbaity for sure. Oh, yeah. It's for sure clickbaity.
Oh, yeah. It's and I'm clicking.
It's drama for drama's sake. It's the Kardashians of cybersecurity is what we're looking at here. My take on this thing is this, though. Culture is something that is real inside of these companies. I've seen culture start one way and a different way. I've seen cultures transition over time, and it always comes from the top. And I don't necessarily want to point fingers at the CEO, but when I say the top, I mean the executive leadership team as a whole is the culture of the business. And if you have a certain executive leadership team in place, you can't change what's going to happen from a cultural perspective. It's just going to filter down. And so I have not heard I have heard some not so nice things about some of the executive leadership inside of Zscaler. And I can't say for sure. I don't know the people. I'm just saying on conjecture and hearing through other rumors. But when I hear things like, have you met so-and-so? And I say, no, I haven't met him yet. They always follow that up with, oh, right. And that's usually a bad sign when they're describing leadership that way. And culture comes from the top. And so I'm not surprised at all if they have that reputation, if the exec team has that reputation, the sales team has that reputation. And I think in this scenario, it's a scenario of where there's smoke, there's likely at least a smoldering of a little bit of fire.
Yeah.
I think that's probably true. I mean, tone from the top is definitely a real thing. I've been at companies where I've seen really good people do awful things because it's been allowed, by the CEO or the board or whomever. Yep. And I've also seen really good leaders who have taken a contentious situation and turned it completely around. Again, I have zero affiliation with Zscaler and don't really know anybody there. For a while, one of my old companies was, it was an acquisition of sorts, and some of the people at Edgewise went over there. A lot of them have gone, and I didn't really keep up with them. But I do think that this particular article was just throwing flames, like, intentionally. And I think it's silly. I think we have bigger problems in security than to be making drama out of somebody going from the number one spot by a firm that has a somewhat arbitrary process of ranking vendors as if there is a specific formula to say which vendor is the perfect vendor for all buyers in the universe. like you said, it's a Kardashian thing, because there's no one vendor who is the best vendor. You just yes, there are better vendors than others in certain areas, but I'm the number one vendor in this person's magic ranking. It doesn't work anyway.
You know what, though, Katie? I think this brings up a more important question than, some kind of Housewives of Cyber Hill here kind of scenario. The question is the validity and importance of the MQ. And so I get this question a lot as a Frac CMO and former CMO. It used to be very, very important to have analysts on your side. Very important, because buyers called them, right? That was the audience that they called and said, hey, Mr. Analyst, you cover this market. Who are the top 4? And that was the question, right? They didn't really care. They asked all sorts of questions about differentiation and all that kind of stuff. But at the end of the day, they needed to go from 10 in market to 4 in market that they could demo. And this was the quickest way to do it. And I still think there's some validity in that, right? But if most CISOs now are tapping CISO Slack networks, tapping their own private Slack groups and their own kind of community of folks, does that lessen the impact of an analyst firm in this scenario?
I mean, I certainly have a point of view on that. I think.
Oh, I got her speechless.
No, I'm trying not to be super, super offensive.
Well, that alone says enough.
Yeah, I mean, the fact of the matter is, okay, so when I do inquiries with analyst firms and I ask about the firms asking about X, Y, or Z, the answer from the analysts, when they're being honest, and I think most of the time they are, is that the majority of questions come from vendors.
Mm-hmm.
The majority of inquiries come from vendors. The majority of money comes from vendors.
For sure, but I think there's more to that question, because
I'm trying
the
not
flip
to
side
be
of that
offensive.
coin is, like, I'm an IONS analyst. I'm an analyst at IONS, and I do inquiries monthly, a lot of them, and I've been ramping that up quite a bit. I don't take a single vendor inquiry. It's 100% enterprise inquiry, and maybe it's the function of IONS research as opposed to Gartner, right? 100% could be.
Yes.
But the Gartner guys and gals, they're going to be taking inquiries too.
The business model is, when I worked for Forrester many, many years ago, and I'll probably get in trouble with someone for saying this, the stance was, you cannot buy your way into research. You can't do it. It isn't pay for play. However, if you're one of those vendor companies that's in contact with the analyst, if you're one of those vendor companies who's doing advisory with the analyst, if you're talking with the analyst and taking their feedback and absorbing it and using it, you have a much greater chance of being mentioned when a particular topic comes up. These are euphemisms.
Yeah, I mean, that was always the hard part when I was an analyst too, was knowing who was your true friend and who was just trying to butter you up to get in your latest report. That's always a difficult scenario. But, I think this is a spot where, just the importance of the MQ is, like, if you downgraded somebody because they have sales arrogance, it doesn't change the fact that the tech is still as good as it was before they were arrogant when selling it. So does it make it a crappier spot in the MQ just because their salespeople are arrogant? I don't know. This is kind of just a weird kind of message to be putting out on the MQ, because you're basically saying, hey, how nice you are matters. And does it if you're buying tech? And I'm not saying that to say that it's not. It's like, to what degree does the arrogance of the salespeople matter?
Well, personally, I don't want to buy from an arrogant person, but there's also another question. Has this claim been validated?
Right, and by who? Obviously,
right.
They're claiming in the article, and I'm sure Gartner will tell you this, they're claiming that this is through feedback from, right, part of the MQ process is feedback from customers, and the customer feedback came in probably with enough overwhelming commentary from enough of them to include it in the article. That's going to be what Gartner's stance is. And then who cares? Does it really matter? Well, you know what? Here we are debating it on our show, so I don't know. If a tree falls in the woods, nobody's there to hear it. Who cares? This is a moot point.
We fell for the clickbait.
Oh God, did I ever?
I included it. I fell for it too.
It's Adrian's fault. Let's just all blame Adrian.
Yeah. Blame all your Forrester and Gartner complaints to Adrian Sanabria at.
All right. Flaps extended, flaps up. We got to land this thing. There was more I wanted to talk about here. Amazon, we don't really have time to dig in too much, but Amazon's finally jumping into the large language model trend going on. And they're taking a little bit different approach where they're basically going to give you the tools, much like AWS does, to kind of build and roll your own, which I think is really interesting. I think this is the beginning of the LLM that knows your company, right? That you train based on your own data, which is going to get really, really interesting. Because
the one I'm most excited about, and I haven't seen it yet, and I'm waiting for the person to put it out because I'm going to give them my money immediately, is the one that trains on all my data that I've collected for the last 20 years in my inbox, that I've collected in my Dropbox, in my Google, and in my calendar. Trains on all of that, knows everything that I've ever done, and gives me a personal assistant.
The prosumer product, right? Like the superhuman level. Yeah, that's going to be interesting. I cannot
wait for that. I've been trying to build it myself now for weeks. I'm so excited about it, and I, of course, don't dedicate the time to do it right, so it comes out halfway. But
I lose so much time going through my old notes and stuff, looking for things, just prepping for the show. Huge amount of time just going through Notion, going through, old show notes and stuff like that. Yeah, I could have sworn we talked about this. Huge time savings for me too. Once that's the thing. The Auto GPT, baby AGI, we'll hold off on that stuff to talk about. I think when we do our AI special, which is looking like it's going to be early June. Because
I'll be there for that one. For that whole show, I'm excited about that one. That's going to be amazing.
That'll probably be first week of June, because all of May we're going to be running the interviews that we do at RSA, which I am personally doing like 6 to 8 of those. I forget how many of those I agreed to, but 15-minute interviews. Going to be a lot of good conversations in there. So we will have new segments in May, but then most of the interview content is going to be from stuff that we recorded at RSA, these micro interviews, I think they're calling them.
Awesome.
Which is something that we do every year. We've been doing that for a couple of years now. And a few books here. I just wanted to shout out Security Chaos Engineering is now available. Showed up earlier this week for me. Kelly Shortridge's book on Security Chaos Engineering. Very interesting stuff in there. And then Andy Ellis's book, 1% Leadership. Each chapter is just kind of like you can, it's one of those where you don't have to read cover to cover. Like you can just open to a chapter, read that one chapter, and it's an interesting lesson on leadership from Andy. So it's a good one as well, about a 200-page book. And then maybe we finish up with a squirrel story. And if I'm to pick one of these squirrel stories, it's going to be number 27. Kind of funny, kind of disturbing. They're basically using corpses of birds as drones.
Wow. Go click on that link and look at the Twitter video. Holy smokes.
Yeah. Imagine you're a bird. Like, what would you think about somebody like repurposing the corpse of another bird as a drone?
What? I've been saying this all along, guys. Birds aren't real.
Birds aren't real. That is
clearly they're not real.
@ Birds aren't real is the first one to respond to this story on Twitter, to this Reuters story.
See, I told you birds aren't real. You didn't believe me. You made fun of me. They're all a government plant. They're all drones inside, and there is now proof.
Yeah, that might be birds aren't real might be 100% of the replies to this Reuters story. But I'm sure there's some cool research they can do with robot birds that look like real birds. They can get closer to study other birds, but I still find it disturbing. And I wish they just wouldn't. You know what? let the birds have some mystery. Just stay out of their business. Keep your robot taxidermied corpse drones away from them.
Taxidermy corpse drones.
That's what they are. That's what they.
Birds
I mean,
aren't
they
real.
must have to taxidermy them. Otherwise, they would just decay, like as they're using them, right? Oh. All right. So a little bit before we wrap here, next week we have pre-recorded an entire 3-interview episode for you next week. Episode 315 was pre-recorded last week, and it is our quantum special. So we got Kayla Lee from IBM is an expert on quantum computing. She's somewhat of an, I don't want to say evangelist, because it's more customer success. Like, she works with customers currently using quantum computers. And she gave us a great kind of foundational rundown on quantum computing, what you can do with it today, how fast it's moving. I asked questions like, is there a Moore's law for quantum computers? So clearly, like, they're not a general purpose computer. We're not going to have them in a phone or anything. Like, these computers have to be close to absolute zero. I think she said 15 millikelvin is where they operate at. So not going to fit into your, and not even if it could, it wouldn't be that useful to you. But great conversation, answered all my questions on, what quantum computing is, what you can do with it. And then the second conversation that builds on that was Vadim Yubashevsky, who has his name on 3 of the accepted post-quantum standards from NIST. So the guy who put together did the crypto design for those standards for 3 of the 4 standards. He's one of many people whose name's on it, but specifically what he does is he designs the algorithms. I'm probably not using the right words. Just watch it. But it comes
Just go watch it.
And then for the third interview, we weren't going to do a news segment because how useful would 2-week-old news items be to you? So we did a third interview for the third segment instead. And that's Mr. Matt Johansson, who just came out with a great newsletter called Vulnerable You. And we talked to him about the current state of InfoSec, the death of different markets, the decline of different markets like DAST. He's an AppSec guy. It's a fun interview. We talk about API security, Tyler. I think you'd enjoy that one. And that's Excellent. the final interview that's going to come out next week. So
maybe we should have used generative AI to see what the future news was going to be and talked about it in the past.
That's an interesting idea. We might have to tuck that away and use that.
You're getting all meta now.
News segment of AI produced predictions, or just a hallucinated news segment, entirely hallucinated segment. All right, and with that, check in next week. That pre-recorded segment, and it's pre-recorded because I will be at RSA and unable to do a live segment. So I'm glad we got that put together. I won't be relaxing, though. I'll be busy out at RSA. Say hello if you see me there. Thank you, Katie and Tyler. And see you in a few weeks.
Enjoy San Francisco.
I'll try.